All right, guys. Well, thanks for sitting down today. I guess this is the first ever Inventa Capital Partners podcast. I think we're going to have to think of a better name for that as we move forward. But, you know, we've been talking about doing this for a couple months now. We finally fit into our schedule while you guys are in town and I'm in town. So let's talk a little bit about what's going on in the industry, what's going on with our portfolio companies, and, try to let people know why they should care what we think about things. So where should we start?
Well, let's see how this goes. What could possibly go wrong?
Yeah. So this has been a big week for copper. You know, I think I kind of wake up every morning and I look at my Kitco chart and I feel sad about my life when I look at gold. I feel sad when I look at silver. And then I scroll down and at this moment I see copper at $4.52. And I feel, pretty good. I feel a sense of relief. What are you guys thinking about that? You've got Surge Copper, Craig, that you're on the board of. Mike, you've just spun out Vizsla Copper from Vizsla Resources, now Vizsla Silver. Mm-hmm. Let's start talking about copper.
Let's start. It was our favourite topic. It's the topic of the moment with copper punching up towards all-time highs. I think that, the way it's just powered from $2.80 at the last dip to, where are we today, $4.50? Unbloody believable. I'm astonished with how quickly that's happened. And I think I wouldn't be surprised if we wake up sometime next week and we see $5 copper, record all-time highs. Everything's pointing in that direction. So what a time. I think that, in our portfolio, the one thing we don't have enough of is copper, so we've got to find some more. And we've been trying to do that for the past couple of months, of course, but, geez, there's not much out there. That's the astonishing thing, the thing, my biggest learning over the past couple of months of sort of scrounging around looking for, all of those great copper things that we used to look at and know about. And, we've done due diligence on a couple of things over the past couple of weeks, and it's quite apparent there aren't many good copper projects out there. Surge has certainly got a good one. Yeah, you're right to point to that. But, it's looking very, very good.
Yeah, and we're starting to see this, of course, with many other commodities. You have lumber hitting doubles of what it was last year. You talk to anybody who's building a house, they can't get a price sheet on lumber that lasts more than a week anymore. We're seeing shortages, and I like to call corn Bitcoin because it's trading like Bitcoin. All of these commodities now, except for some of our most favorite gold and silver, I've been trading incredibly well, and I actually think that this is just the beginning. I don't think we're going to hit a price ceiling of all-time highs on copper and stay here. I think $5 copper certainly, but I know, Craig, you've made some bold predictions with prices, and you join the ranks of Robert Friedland and people like that when you do that. But this is just the beginning of it all.
Yeah, kind of to your point about housing prices. Nick, our analyst at Resource Insider, he's got a friend building a house right now, and the construction costs have gone up 20% in 2 months. And I mean, what are houses up in Vancouver this year? 20% I think, at least, right? So here, okay, I'm going to play the devil's advocate for a minute, and I'll say this as someone who has been heavily looking and investing in copper assets at Resource Insider. But I think of that report that came out from Goldman Sachs, is copper the next oil, et cetera, et cetera. But I also think of that report that came out from Goldman Sachs last summer that said gold is going to $3,000, and I think they managed to nail the top almost perfectly. Mm-hmm. Do you think we're going to see that in copper? When I look at that copper chart, it's pretty dramatic. It's going up. It's a beautiful thing.
It is a beautiful thing.
Let's. I don't know if camera can see that there, but it's pretty steep. And are we due for a pullback here, or what are you guys thinking? Understanding that you don't have a magic 8 ball, or that's not what I meant to say. What are the things they use?
It's a magic
crystal
8 ball.
ball.
Crystal ball. Thank you.
So, speaking of 8 balls, I hear that bloody drug dealers on the street here have now taken to selling little baggies of sawdust for $15 a gram.
That's right. That's right. Yeah, a lot of terrible things being done for lumber packs.
So that's the astonishing thing. If you I'm looking at all these charts here, inflation charts. Bloody lean hogs are up 150% over the past couple of months. Crazy stuff that clearly points to inflation. You're not seeing that translate into CPI anywhere at the moment. And of course, you know, the statisticians that report CPI typically manipulate that data and pull out things, you know, on a seasonal basis and the like. So there's a bit of that going on. But at some point over the next couple of months or next couple of quarters, I think we'll actually see real CPI increases. And the astonishing thing to my mind right at the moment is we haven't seen the gold price take off, we haven't seen the silver price take off, and they're the things that the best things traditionally to hedge against inflation.
And that'll come when those CPI numbers are modified to actually take in. It'll probably be 1 to 2% inflation when we know it's 10 plus. But you know, that'll happen, and that trade will come back on when that's the case. But until then, you know, you're looking at a few other tailwinds to copper as well, which include the electrification theme that you're seeing. We're getting governments mandating new grids, electric cars, you know, all these things. It's just it's an insane amount of demand being put into the equation.
I just caught up with our friend Harry Pockrent for lunch today, and he's just bought a new Porsche Taycan. And
this is the electric Porsche, right?
The electric Porsche. He's got the power wall at his place at Whistler, where he spends most of his time nowadays. Lucky man. And but he hasn't got one at his house in Vancouver yet. And I said, you better do it very, very quickly, because I think the price of those things is about to double or triple, because they're mostly copper, of course. Yeah. So how do you? I really think that, you know, at some point in the next couple of months, we're just going to see gold and silver go absolutely ballistic. I think we will see that $3,000 gold price at some point in the next 12 months. So, and we need it. You know, the gold market's been a bit weak. Of course, we've got our Gold Bull Resources putting out some spectacular drill results over the past month, just trading flat, which is a little bit frustrating and disappointing. But I think you know, once eyeballs come back to the space, back to precious metals explorers. You know, Vizsla the same. Vizsla's had a better run, of course, because we've put out some truly spectacular numbers. But so we're doing pretty well there. But I think we're about to have a really sort of big back half of the year for precious metal stocks.
You know, you talked about the CPI, the Consumer Price Index, and I saw a chart the other day put out by sort of a macro commentator, Lynn Aldrin. I don't know if you saw this, and she compared the CPI versus, I guess, the Big Mac Index, and you see the Big Mac Index, the price going up, you know, quite dramatically in comparison. And I think I speculate that the point she was trying to make there was that this is not actually reflective of what's going on in the world right now, that it's not accounting for what it's like to live an everyday life. And I think that's a good point. Like, you know, I'm going to show my macro ignorance here, but I don't know what actually goes into making up the CPI. But, you know, it certainly doesn't reflect what I'm seeing day to day.
Well, it's a basket of goods that are, you know, interchangeable at their you know, behest. So it really isn't reflective. But you know, what's really reflective is if you go, there's other thing called shrinkflation too. If you go look at, you know, how much is in a chocolate bar in terms of grams of material over the last 10 years, it's been steadily shrinking. Now it's shrinking at an accelerating pace. If you go and fill up your car, you know, which we've all done here, we don't all have electric vehicles yet, unfortunately, but you fill that up, it's up 10-20% very, very easily already since last year. And so, yeah, I mean, the CPI is never truly reflective of inflation.
Yeah, fair enough.
No.
Why do you think gold's such a laggard? You know, is it a matter of Bitcoin kind of sucking up the retail energy there, or what do you think?
It's probably a bit of that.
Well, I'm not sure. I think there's sort of distinct groups of investors that invest in the two in a way. I reckon probably actually we've just had such a great run for up to a point to a few months ago that people are just taking a breather.
Yeah.
You know, there's certainly a bit of trading out of equities and probably the metal as well. Silver continues to look strong though on that front, so that's, you know, let's see where that goes.
You know, I had an interesting conversation last night with a friend or a colleague of mine who's a fund manager at Asia, $200+ million precious metals fund, and he was saying, you know, when I talk about the precious metals trade, people kind of just like, they act like you're old. They act like you're outdated. They're like, that's like, so 2007. And he's like, how do you deal with that? And I'm like, he's like, you're young. Like, what do you do? And I was like, I don't know what I do. Most of our investors at Resource Insider are in their 50s and 60s. So, we're certainly not bringing in the millennials into the gold trade. But what we do see is a lot of interest in the copper and the battery metals trade. It's like that's tied to the big idea that's, I think, pulling in a group of much younger, sort of millennial-esque investors in general.
And you guys are doing a great job there. Your relationship with your mate Jake Juicy, sort of getting a lot of new eyeballs that haven't. And of course, we've been in this downturn that we're sort of just coming out of now for 7 or 8 years. So there's a whole generation of people who finished university yet to get their head across the mining sector. They've been investing in tech things. They've been investing in cryptocurrency, things that have more appeal. Partially because those things have been rocketing. People, at the end of the day, people are driven by, investors are driven by returns, and they're exactly the same. So you haven't had the returns in our sector.
But you know what I will say, and this is going to be interesting because the amount of silver that's been taken out of the COMEX by younger millennial type people recently is historic. It's never happened before. This Silver Ape movement.
Yep.
This is the Wall Street Bets crowd.
We were in Mexico when that was happening. That was the funniest thing. We'd be flying around to different, actually going to Tarachi and looking at the near-term gold plant that we have, their production at Tarachi. We were flying in and out of the mountains, and this was during the my joke is always I'm old enough to remember the bull market of January of this past year here for silver. But,
the one-day bull market.
We would get intermittent service, and you're looking at the silver price, and we'd be calling our brokers to buy. At that point, it was the SLV, not the PSLV. But what's funny about that, and what's going to happen because of this Silver Ape movement or the Wall Street Bet movement?
So, what is the Silver 8 movement? I think we should define that because I don't even know what that is.
That's what they call themselves, silverbacks.
Silverbacks?
Yeah.
Silver Ape. Oh,
Silver
I
Apes.
thought you were saying Silver 8, like the number.
No, Silver 8.
Silver. That's awesome.
Yeah. No, it's an incredible movement, and it's all based on Reddit, right? That's how it kicked off.
Yeah.
And what happens? The same thing that happened to me when I was a kid. I think I probably touched my first gold bar or silver bar, and then I bought Agnico Eagle. It's the first stock.
Really?
I bought. Oh yeah.
So you were enamored with the actual you look at this thing.
If you hold a silver bullion, or you realize that it's money and it's not.
Where's your silver bullion? You should have it here.
Oh, it's locked away in.
Oh, is
in an undisclosed location under the ground somewhere, because it is real money. But this is a whole new generation of people that are now finding a movement in taking down the COMEX, or as I call it, the CRIMEX, and in the process, they're learning what it feels like to actually hold something like that of value. And even a family member of mine, I was out with him a few weeks ago with the family, and he said, "Oh wow, I never held a gold bar before." And he said, "You can really feel it. I mean, you feel the weight, and you feel why it's valuable." See, these are all people that, and he had just done that, and these are all people that I think will kind of be converted into this, idea of investing, and it's all helpful. It's finding new eyes on these stories, and then eventually you get down the road of, okay, I like the majors, that's great, I'm getting dividends, that's wonderful, but you get exposed to the wealth creation event of a discovery, and that's what brings people's eyes in. Not everybody, of course.
Yeah.
That's why you bring in the retail investors into the space.
I think you made a good point, right? And it's made a lot of sense over the last decade to be in the FANG stocks, to be in the growth stocks. Do you think we need like a hammering in that before people kind of take a step back and be like, shit, maybe I should be positioned in something that's real. Maybe I should transition to value investing.
Well, we've seen that before. Of course, the tech boom up to 99, 2000, of course, made people vast amounts of money. But that stopped very abruptly at the end of 99. And that was the start of this resource boom. Of course, the drivers were different. It was the urbanisation of China that created the metal boom that came between 2005 to 2013. But it was at the sort of whether it was a leading indicator or not, probably not, but it was at the start of that. And so you've got exactly the same setup. here happening as we speak. So, but again, I think at the end of the day, it's returns or potential returns that drive investors. Doesn't matter what age group or category they're in. So we've got to see, a return to the sector. We've seen good returns made out of precious metals miners and explorers in the past 12 months. So we've brought a few new people back to the sector, or a few people back to the sector. We still haven't seen that wall of generalist money yet. It's resource investors, dare I say it, sort of, can I say this? It's been a bit of a circle jerk. It's we, us and friends investing in companies, people around the streets of Vancouver, of Perth, that have been in Toronto.
There's probably about 1,000 people propping up half the TSXV and
totally. And then it certainly
Australian
hasn't been investors out of New York in any material way. We're starting to see that now. So I think we may be off to the races, but when does it happen? That's my question.
What's the impetus? Right?
Well, let's look at it a different way. How does it happen? Does it happen with the generalist funds from a top-down like allocation of capital, or does it happen as this sort of bottom-up uprising of the Reddit crowd and the silverback apes and all that shit?
Maybe they meet in the middle.
Well, and that's a good question. Well, that's probably what happens because, of course, we saw something. I think that earlier this year or late last year. Anyway, there was a peculiar moment in the market where we saw some of the pundits out there and investment banks say that this has never happened before. It was last year with airline stocks, whereby a bunch of funds had short positions in airline stocks, and the inflow of investment from retail investors, the sort of Reddit crew, stopped out a bunch of short selling in airline stocks. Well, apparently that was the first time in history whereby the retail sector in investing beat or broke the investment thesis of the sort of Wall Street and fund managers, the old guard. So, that's a sort of fairly momentous thing. I think there's sort of been a democratisation of investing in a way from this.
Yeah, and there's other forces as well too, and of course, some of the early money of this has already come into the dividends they're seeking in gold, right? Gold price has been steadily higher than it has been for the last couple of years. Costs until recently have gone down, I suppose, in some miners, and some miners have been able to play the COVID period where they weren't shut down as much, and they've been able to create significant returns at these metal prices for investors, and I think that attracts some institutional buying. But I think for that to occur on a large scale, there has to be a kind of a full secular rotation into the metals.
Yeah. Yep. So I'll say from my own experience, and I'm kind of asking a leading question there because Resource Insider, our whole premise is the democratization of venture investing, is helping retail investors get into opportunities they wouldn't be able to otherwise, private placements, early stage, pre-IPO financings. And every day I talk to our members, and I've talked to hundreds of people. These are what I would consider the financial backbone of America. These are the dentists, the lawyers, the doctors, the small business owners, guys and girls and ladies that have been successful in their own right. And, historically, they've stuck their money with a wealth manager or some traditional means. And I see more and more people have gotten sick of that style of investing. They haven't seen the returns they wanted. They haven't enjoyed the fees they're paying. So they've taken control of their portfolio. And they're kind of, they're leading the way into these things. And, I have this conversation almost every day. And I'm a little biased, I think, in what I hear because I'm a mining-focused investor. But so many people who are scared of what's happening in the sort of wider markets, and they're looking to really position themselves in precious metals and real assets. Yeah. But what's interesting, I think, is there are two groups because retail tends to lead the change and be the first in, but they also tend to be the last in as well. So there's a group of retail investors that are the first money. They kind of see these trends before they occur. They're able to act quite nimbly. They're educated, they're intelligent, and they see, the tides are shifting, time to get into, in this case, mining, hard assets, et cetera.
Yep.
Then there's another group of retail investors that have get in way too late, and they say, oh shit, everyone's investing in gold. Everyone's investing in Bitcoin.
Yep.
Time to get in now, And so I've seen that a little bit over what I'm seeing is retail is the first in, but they're also the last in. And you want to, if you're listening to this and you're a retail investor, you want to ask yourself which of those groups you are part of, and one's a lot better to be part of than the other, I would say.
Yeah, but you can manage, like here it's pretty straightforward to manage your risk because we haven't even really seen the beginning of a resource sector boom yet. The last one was 2005 to 2013. So, anyone who bought from 2005 up to about 2010 did spectacularly well. And, of course, it's the last little bit that really kicks up. And I sort of wonder with the FANGs at the moment, you see absurd valuations in companies like Tesla, perhaps even some of the actual FANGs. Looking a little bit toppy to me. Bitcoin, gee, that's looking very toppy.
The Fed has created a bubble factory right now, and that's what's happening here. The statistic is that metals and commodities are valued at the lowest they've ever been in history to the S&P.
Yep.
So that should solve the time.
Yeah,
That's bubble factory. Tesla, I think they made more money than they've ever made.
Yes.
Promoting Bitcoin. Elon Musk would be the best house free promoter, but he's done it on a grander scale, with Tesla, and those valuations are obviously included in that indexing, right? But that relation of metals as an index and commodities as an index to the secular markets there's never been such a disparity, and that is the best place that you want to be if you're investing in this stuff. The road ahead is very long and very profitable.
And just to clarify what I was saying is I still think we're in the early days of retail investors moving in here. But I look at, Bitcoin as an example, and I think like when every single person is talking about the coin they're buying, like maybe you're probably in the tail end of that, at least for now.
Yep. Mm-hmm. Yeah, my 1,000 Bitcoin, I've started selling those just recently. Totally missed it. But
yeah, I looked at about last year when Bitcoin was at $5,000. I was like, I should buy some of these. And I asked someone, how do you set up a wallet? And he was like, I go here and then. I was like, I'll do it later. Still later today. So that's probably the missed trade of the.
It's not too late. It's not too late. What I'm hearing is that silver's the new Bitcoin.
That's right.
All right. 10x from here. $260 silver. What do you think?
We were talking about this last night. I was rambling on, I suppose, about how very quickly new price memory can be created with these commodities, and it could feel like it's overnight. That you're talking about $5,000 Bitcoin last year. Now it's 58 or whatever, 52. I think we could be sitting at $50 to $100 silver and looking back and say, oh, that was really cheap at 25, 30, 45, 50. And the same thing's going to happen with copper. The incentive price to bring in some of the mines that actually have to come online, is probably double what we see right now.
Copper will be a precious metal one day.
You are starting to sound like Robert Fried. What's the quote? Put bricks of copper in your walls, put up the drywall, and in 15 years you can sell it off and buy an electric Ferrari. I think was the quote.
If you build your house out of wood, you could tear it down and buy a Ferrari.
Well, silver. I love silver for the fact that it's as much a commodity, a useful item, and it sits right at the core of this sort of global EV electrification of the planet theme. So that's going to do very, very well. And again, the whole sector's suffering from the past 7 years of complete underinvestment, a massive period of no exploration, very limited project development. So there's not much out there. There's not many pipelines of any sorts of projects to. Tin, we've seen tin take off. People hated tin, but we've seen it. We're pushing all-time highs there. So I love silver, and we love precious metals for the fact that they're a commodity, a currency, a store of value, and a hedge against pestilence or pandemics or whatever. And of course, we've seen both of those metals perform very well. But I've got such a soft spot for copper because. you see what happened during that last boom. I think from about demand from 2001 to 2010 or 11 went from 14 million tonnes per annum up to about 18, 19 million tonnes per annum. So we saw a growth of about 4 or 5 million tonnes per annum of demand. And that was enough to take the copper price from 72 cents. When I used to work at Rio Tinto, we used to have to put in our models a copper price, and this is 2001, of 72 cents, diminishing at a cent a year to infinity. So that was the global, industry leader in terms of copper production. That was their outlook. Of course, that jump in demand of about 4 million tonnes drove the copper price from 72 cents up to, what did we hit, $4.60 high. So what's that, a 5-bagger in a metal? This time round, we're sitting, we come into this market at a copper price of $3 or at $4.50 today. You look at some of the pundits out there. Goldman Sachs, of course, have put out a recent report, very, very good, saying copper's the new oil. You've seen Trafigura saying that copper's a one-way rocket ship to the moon. They're saying that we'll see over the next 10 years an increase of demand somewhere around 7 million tonnes. So that last jump in demand that drove the price up 5 times was 5 million tonnes. Here we've got 7 million tonnes at least coming. What does that do to the price, particularly given the massive underinvestment in the sector we've seen in the past 7 years? So I think that sort of dramatic demand increase over the next coming 5 or 6 years, it wouldn't surprise me if we see $10, $12, even $15 copper, and it takes the price you need before you incentivise replacement for copper is probably around $15 to $20 a pound. We may get to that level. I think we're about to see the most extraordinary boom in history.
So you've talked before to me about the problems on the supply side, and you've used some really good sort of back of the envelope math here to explain just how little available copper there is in the world. Could you go through that again?
I've forgotten it all.
All right, let me try to remember. I think you used either Kamoa or a mine in Chile that was coming online.
Mina Hussein, so our mate Simon Smirlek at Osenko Engineering, the leading EPCM / mine building, independent mine building company in the world. So Simon's the COO there. He just finished, or they just finished building Mina Justa in Peru, which I actually worked on when I was at Rio Tinto back 20 years ago. Fabulous project, very high grade, low strip ratio. That project is going to produce 105,000 tonnes per annum of copper. It's been, I've worked at it as an exploration geo 20 years ago. So it's been in that sort of discovery, resource delineation, development phase for the past 20 years. So it's taken that long to develop a really, really solid project. It's not a tier 1 project, but certainly a tier 2 project. 105,000 tonnes per annum of copper production. Mm-hmm. It's cost them $2 billion to build that. So very good mine, very good location, okay. $2 billion to build that. So to meet the demand that economists see coming for copper, we're going to need another 70 of those. Now you've
70.
70.
70.
So 70. So that's $2 billion to build it. So times $140 billion of investment over the next 5 years just to meet demand that's nearly here already. So, and then you've got those anomalies out there. Robert Friedland's spectacular Kamoa Kakula project, which is a true tier 1 project. Now that, if it gets up, probably will, but it's in a challenging jurisdiction.
Let me interject there for a second, because 70 of those come online. Are there 70 of those that could come online?
We just did a screening exercise at in Inventa, looking for assets for our copper spin out from Vizsla Copper. We've screened most of the world's projects. We reckon there are 20 that might come on that can produce that sort of level over the next 10 years. That's 10 years, not, you see how it's taken 20 years to get a good project like Marcona, Mina Justa up.
So the other 50 have to be discovered before.
Well, exactly.
So what's the discovery cost?
Well, they're potentially out there, and I think this is where the rubber hits the road. There are some projects out there. Like we got control of Surge Copper last year. We love Surge. Mm-hmm. We bought Berg, the Berg porphyry off Centera. in a $10 million deal. That gives us nearly the better part of 1 billion tonnes of ore at about 0.5% copper in British Columbia. The reason we did that is, firstly, it's a fundamentally good project, but 0.5% copper 10 years ago, you would have got laughed out of the room by investors. Today, we think that's, the average mine grade's about 0.6%. Now, this is in British Columbia where you've got low-cost hydro power, great First Nations support, best place in the world for ESG management of a project. So a great place to be. So there are some projects out there like that, but to build a very big mine on that type of project is going to cost a couple of $2 billion. So trying to corral all of that, find good projects in good jurisdictions, advance them through permitting, and raise the capital to do it. That's the real challenge. And it's very, very. And of course, what does that all mean? What do you get out of that? Well, that you end up with a price because of the lag in permitting and developing a project, prices spike. And so hence I think that we could see $15 a pound copper in that period where people can't bring on production quickly enough to meet the demand that's coming. So and then that of course does drive investment. You reach an incentive price for a lot of projects, and that's where it becomes important. For me as an investor, becomes important to back people who know what they're doing, good teams that can advance a project and actually get it built, and they're the guys that will benefit most from this sort of these price spikes we get in the sector. Terrible business, really, mining in that sense, in that it's so cyclical, and prices they can make us hurt for so long, and then we have these golden periods. I think this next golden period is going to be a spectacular one, potentially the best in all of history.
And just have to think back to last year and think of the wealth creation that happened out of discoveries that were funded because of an open capital market for precious metals in basically the 8 months from the shutdown of the pandemic in March. It was life changing for many people. Imagine a sustained period of that type of capital investment, funding discoveries, funding wealth creation in that sense, and funding the development and production of assets. It's going to be spectacular.
It's going to be some fun for sure. The last boom was interesting. It was a good time. There were a lot of sort of pretty average projects that were funded and moved forward. I think if one positive was to come at all out of this downturn that we've been through, it's the culling of subpar projects and subpar management teams, I suppose. So, this is something that we used to talk about at ISO Energy with our, where we've got our hurricane discovery that it's very, very easy to get set in our sector now because the hard work for investors has largely been done. It's been a Darwinian process, I suppose, where it's only been survival of the fittest. So guys who can actually, who are credible, that can get projects funded, find projects, that's all that's left. So if you're looking to invest as a sort of layman, you someone from I better not swear too much, but from Midwest USA, and you're looking to how do I penetrate the market of Vancouver or Toronto or West Perth? Well, it's pretty straightforward. The work's been done. There aren't many good projects left, and it doesn't take too much searching around the internet for Resource Insider, Jamie Keech or Jake Juicy, and you find who the good guys are and where you put your money.
Yeah.
All right. So what else do we need to talk about today?
I had my
I got to
COVID.
take some time just to redigest that again. I've heard that before, but it's always so good. The Mina Husta, 70 of those is really just a spectacular data, isn't it?
It boggles the mind, doesn't it? Like you can't.
So Biden comes out and says, "Oh, we'd like to have a brand new grid. Here's a few years to do it." Okay, where do we get all the? I mean, it's not just copper too. It's nickel. It's silver, tin. We do do have a tin company that's launching soon. That it was a bit of a labor of love for, when did we start that? 2017. After the successful accident in cobalt that we timed fairly well, but went and staked and developed a pipeline of projects in tin. You know, and of course the application there is soldering, right? And so, you know, when you think about all the metals that are impacted by, you know, we talk about copper right now, but you think about all the metals that are impacted by, you know, this government stimulus. You know, it just all kind of builds up into this spectacular opportunity for metals. I mean, you think about a government that's bringing on MMT, printing to infinity. And we already had QE infinity times whatever it was. Now this is just unbridled monetary printing. And the money printing is being used to bring people back to work. So what do? You give people jobs and infrastructure. It's going to create, you know, just this. It could be unlike anything else in history in terms of resource power.
I wonder about inflation. Are we about to? Because it is unbridled printing. Yeah. It's crazy, isn't it?
The only problem is that you still have to pay taxes. They can print money for everything, but they can't print money to cover taxes.
That's a shame.
Yeah.
No, I mean, but you're seeing inflation now, right? And I think, you know, we touched on that earlier. You know, we're seeing it in gas, we're seeing it in lumber, we're seeing it in a lot of the day-to-day items, but, you know, when is that going to trickle down to precious metals?
I see the other day, on Twitter, I follow a guy, I think it's Biden voters posting their L's.
Oh, yeah.
The one this morning was great. He posted a photo of the gas price and said, can we have a re-election now?
Yeah.
All right, guys. Well, I think we're coming up on about an hour now.
Wow.
Anything we should touch on? Anything important that we haven't hit?
Have you fellas had your COVID vaccine yet?
I haven't, and we're next month.
Your next month? I had mine on Friday.
They're getting all the old guys first. You know that.
I know.
There's so much more to live for. We get to enjoy the bull market longer.
I had the cut price AstraZeneca version, the cheap version, and I had a 24 hours where I was fine, and then just got very, very tired and a bit of a fever. But so I went to bed at 8 o'clock on Saturday night last week and sat there and watched Norm Macdonald videos to get ready for this momentous event, our first podcast.
For this.
I can't remember any
Norm
bloody
Macdonald.
jokes.
You're not going to tell the moth joke?
I want to tell the moth joke. He told a joke about Andy. Everyone gets their 15 minutes of fame, as Andy Redding said. And it wasn't. It was Andy Warhol, wasn't it? I was thinking you're the. Hopefully, you become the the Seth Rogen of
Seth
podcasts.
Rogen. He is from Vancouver.
Oh dear.
So what's the moth joke? I feel like we've kind of buried the lead on that one. What?
Oh,
Do I have it? Let's see.
Oh, that's a long one.
Well,
we're gonna have to edit this one out.
Right?
We're gonna have to edit this out.
We can cut this out. So a moth is no, I can't do it.
No.
I can't remember. I need to prepare.
How good's Norm Macdonald though? Oh, he's unbelievable.
You know, actually, this could be controversial, and this could be some clickbait for this year. Steve DeYoung,
Yeah.
chairman of Integra, looks to me exactly like Norm Macdonald.
He's got the eyes.
Yeah.
He kind of
talks like him.
He's got the smile and the kind of the crinkly eyes up at the front.
Can we talk about people?
Yeah.
Or projects?
Maybe we should just make this like the TMZ of mining and just chase around CEOs with a camera. John, can you carry a camera?
Yeah. We better cut it before we start talking.
Yeah. It's going downhill.
What's happening with M&A? We've seen a few things, haven't we, this week?
Well, Fortuna.
And in a shock move, have gone to Africa. Yeah.
Do you see that coming? No, didn't they acquire that thing at something like $430 an ounce? Rocks, yeah. Doesn't seem low to you?
Is that what it was?
My source for this is Twitter,
good.
so it might not be true. But I did read that $400. I think it was $35 an ounce.
Right, they're good projects, but gee, it's a long way from Mexico.
Yeah, but you look at B2. I mean, B2 has mines all over the place. And
that's a fair point.
They're beloved, right?
Yep.
Mm-hmm.
They make difficult jurisdictions work, and some of these deals, and I don't have the same length of experience. I've been a keen viewer of these things for many years, but some of these things are look bad, and market responds poorly to them. But over time, are part of unrolling a larger strategy, right? And benefits the company in the long term. Sometimes the market reaction to things is the opposite to what long-term shareholder value creation is.
Yeah, well, I think about that at sort of JDL Gold and Trek Mining, which were the sort of predecessors to Equinox, and didn't react poorly to the mergers, but certainly the market didn't react well. We took some flack at the time for putting seemingly unrelated projects together, and then that grew and grew and grew, and Ross Beatty joined, and all the rest, right? So I guess you never know where these sort of nascent steps actually end up leading.
No, absolutely. And that's an interesting sort of, I guess, when it's a good indicator of where you are at in the cycle. And we haven't seen much M&A yet. There's a little trickle of it, but nothing too much. That's usually a pretty good indicator that you're somewhere getting up there when you're starting to see big M&A type deals. That's right. I'm looking forward to the time at some point in the next couple of years where we start seeing $500 million, $1 billion bought deals and things. So we're a long way away.
We need another redback to come down the pipeline there. What was that? A $7 billion acquisition by Kinross, I think?
We do at Skeena. Walt and I talk about that a little bit. Walt's of the Esco Creek true tier 1 gold project, I think now, and Walt said to me, Craig, this could be worth $2 billion. I agree entirely, but I'm like, well, Redback got bought for $7 billion, so under that sort of, it could be worth $10 billion one day. So let's hold on for that.
There's far more money in circulation in the last 12 months. That was over 10 years ago, right?
What is it? 25% of all U.S. dollars ever printed?
60% or something.
Is that right?
I thought it was 25, 60.
Yeah, over some time frame that's quite recent. But think about that though. You think about what it cost to buy a house in Vancouver in 2000. What was that? 2010, 11, 10? What was the Redback?
2007.
7 was
I think. Yeah.
Well then,
7. Yeah.
Think about that. A waterfront home you could buy for less than $10 million. I'm sure.
What's that go for now? 30.
30.
Yeah.
Yeah, that's
and you got multiple bidders.
Yeah.
Didn't the Redback guys bought most of the Pac Rim Tower, didn't they?
Yeah.
But you just got to think about it that way. I mean, I think $1 billion in scrip for a great, fantastic project, Rocks Gold, is really. I'm not going to swear as well, but it's not much. We're going to start seeing things in the double-digit billions, I'm sure.
No, that's coming. Yep. Early days yet.
Yeah. Oh, well, Willem Middlecombe from Commodity Discovery Fund, he was saying 2 years ago when I talked to him, he said, $10 billion acquisitions are coming. We're not there yet, but we're going to be there very soon.
Yep.
And
that has to do, and I'm not going to swear, but I might refer to those cum rocket coins.
Cum rocket coins.
This is what I'm talking about. They're called.
Did you have any of those?
I didn't buy any. I asked Riley.
What are they called?
I asked cummies. I asked Riley, how do I buy those, and he goes. Well, it's pretty dodgy to get your money out of, off the website to buy it. And he's like, they just, it's like any of those gambling websites. You can never get your money back, right? And anyways, this goes back to my bubble factory here. There's so much stuff going on that is literally worthless. It's worthless. It's just you're trying to get ahead of someone else.
It's a musical chair. It's like a Ponzi scheme.
Yeah, and the bubble will pop, and you don't want to be the guy looking for a chair at the end when the music stops, No. But anyways, what is real is real estate, hard assets, silver, gold, copper. It's going to be a real exciting time. It's a revenge of the real assets, as someone said today.
Revenge of that's right.
You said it.
Revenge. I'm just bloody stealing from Goldman Sachs.
Frequent says "Revenge of the Miners." That's been his.
That's
his
right, and the revenge of the old economy. But it's about time because I've got a strong view that people don't. People talk about metal being finite resource. Well, it's not finite. It doesn't go away. It's always on the planet, and the cut-off grade goes down. Like eventually, we can be bloody mining uranium out of seawater, for example, or iron ore in your backyard at bloody 2%. So, it's always there. So you don't have to worry too much about that. But the thing is that for the high grade stuff that we ship around the world, that we dig out and ship around the world, people don't pay enough for it. It's not valued enough, I think. I think people are about to come to a very stark realisation, as you see on those sort of inflation charts over the past 6 months, that these things, as soon as you get the right conditions, there will be a recognition of their true value. I think paying $10 a pound for copper is probably the right thing.
and especially if you want it to be done ethically.
Absolutely. Yep.
I mean, if you have
Couldn't agree more.
ESG, which we do, and that's a core tenet of what we do. But if you when we were doing the cobalt, the idea was invariably the phone that you have in your hand has child mined cobalt in it. It's incredible. I mean, it's still hasn't changed, but the idea was to create a domestic supply that was unaffected by kind of unethical or child mining impacts. Now, if you want copper to be done all ethically sourced, I mean, the incentive price of that is may not be multiples from what you say, but it's going to be a lot harder.
Yep. Oh, you're spot on. Which is why I love British Columbia. The First Nations groups who invite us on their land to explore and develop projects, the provincial government, the Canadian government, and our own principals will ensure that we do the right thing. Follow our own ESG principles and theirs to deliver a strong outcome.
Plus
for
the cheapest,
the planet.
cleanest power on the planet as well.
Exactly, and that's something. That's the great thing about British Columbia, of course. So, great place to explore for anything, but particularly copper. Yeah. The new Chile, apparently. This is what I'm calling it. The new British Columbia is the new Chile.
Saw that on LinkedIn.
I saw it too. Got to brand that.
And of course, we do have 2 BC copper properties in the Vizsla copper spin-out that we're doing anyway. So there's much exposure in the group already, but we're looking at.
We'd like some more.
Yeah. And when can people expect this Vizsla spin-out finalized? When are people going to buy it on the market?
It'll be a summer surprise.
Yeah? All right.
Summer gift.
Give it a few months then. Well, guys, anything else? I think we might have hit it for this week. This month? I guess we'll have to see how often we do these
see
things.
if anyone downloads this.
Well, they're going to get it sent to their inbox, so we're going to get it forced on them.
Have we offended anyone?
I mean, just me, a little. Yeah.
Seth Rogen.
All right, well, I think that's a good place to end it. Yeah.
Good job.
All right, gents. Thanks a lot. John,
Thank you.
thank you.
Thanks, John.
Caller.
Thanks, mate.